Hey, is this Ray Dalio? Oh, Ray, how's it going, mate? Yeah, it's good to finally get a hold of you. I gotta say, I've been panicking a bit lately. You know the market, it's been up, it's been down. And they say you're the guy to go to for edgy market conditions. I just want to ask you one question, yeah? What are your top 10 stocks coming in? Oh, yep. Oh, okay, Dalio, thank you very much. All right, catch ya.
So one of the things that you're going to find out about Ray Dalio is that he loves ETFs. Yes, he does own some individual stocks, but there is no doubt about it, Dalio is an ETF man. Anyway, so his biggest ETF position, sitting at 23.6% of his stock portfolio, is one that follows the S&P 500 index. Basically what the S&P 500 is 500 very large diversified US stocks. A lot of people use the S&P 500 as a gauge for the overall US market. So if you own the S&P 500, you're going to get a very similar return to the entire US market. Also, the S&P 500 ETF is one in which Warren Buffett says that average investors should be invested in, especially if they're not willing to understand and study individual stocks. So this particular ETF was launched in 1993 and was the very first ETF listed in the United States. Since inception, it has achieved a 9% return, and over the last 10 years, it has achieved around a 13% return. So as I say, if you own this fund, you're going to get a very similar return to that of the US market. If it goes up, you'll benefit. If the US market goes down, you will lose out. If you believe in the US's future, you might want to look deeper into this ETF and own it like Dalio. Dalio's second largest position at 21.6% of his portfolio is the Vanguard Emerging Markets Index. So this index tracks the performance of a range of emerging markets. So what are the main countries that it tracks? Well, the highest portion of this index is actually in the Hong Kong at 24%. Then you've got Taiwan at 14.5%, India at 11.6%, China at 11%, and Brazil at 8.5%. Other countries include South Africa, Russia, Thailand, Malaysia, and Mexico. So, what are this fund's main holdings? Well, first you've got Tencent at 4.6%, and anyone who knows Tencent will know that it is a really big and diversified company throughout China, so it will give you a good grasp of China's market. They also own 3.2% of Alibaba, which is a stock that I personally like. They've also got Taiwan Semiconductors, the US dollar as well, which is interesting, and a bunch of, let's be honest, diversified and small holdings. But you know, to be honest, emerging markets have performed pretty poor for Dalio over the past 5 years. 5 years ago, they closed at $37, and now today, they've closed at around $40. So they've really just gone nowhere. And in particular, this past year, it's performed very badly, down from $50 to the $40 mark. But the other thing you must remember about this fund is that it does pay a distribution yield of 2.7%. So those who hold the fund, like Dalio, have been getting paid through that as well.
So yeah, the thing about Ray Dalio is he's very risk averse. He manages this fund for the ultra wealthy. I think you need like over $100 million minimum to be in Ray Dalio's fund. So he likes to spread his risk, and the one thing he likes to ensure is that their portfolio does not drop down. One way he does this is through ETFs. He's got the American ETF, spreading his risk throughout America. And the other way he does this is through the Emerging Markets ETF, spreading the risk throughout the emerging markets, the growing markets throughout the world. So yeah, his tactics are very different to the likes of Buffett and Munger, who like to pick individual stocks.
So yeah, funny that Dalio's third largest position is an emerging market ETF as well, this time an iShares one. It comes in at 6.1% of his stock portfolio. And this one is very similar to the other one that I just showed you. It seeks to track a range of stocks from the emerging markets field, large cap, medium cap, and small cap. It tracks a big range. And as for performance, you're going to find that it has behaved very similar to Dalio's second largest position. If you invested $10,000 into it back in its inception in 2012, today you would have only $11,500. Unfortunately, yeah, emerging markets just in general have performed poorly over the past 5 years or so, but one thing you must remember is that the past performance does not equal future results. If it did, then we would simply pick the stocks that have performed the best in the past. So, it's going to be interesting to see how emerging markets perform for Dalio in the upcoming couple of years. Alright, it's time that we mention Dalio's gold hedge. The SDPR Gold Trust makes up 4.6% of Dalio's portfolio and is his fourth largest position. Now, I'm sure a lot of you are thinking, why does this guy invest in gold? I mean, considering Buffett has said he would never invest in gold because Buffett thinks stocks are a way better investment. By the way, the SDPR Gold Shares Fund simply has the one goal of replicating the price of gold. So it tracks the price of gold, and if gold does well, you'll do well if you own it. So Dalio owns gold for a couple of reasons. First, he uses it as a store of value. Gold has been ingrained for years and years into people's minds for storing value. So even if the currency got inflated and stocks fell, the idea is that gold will still hold its value. In fact, gold is actually used as a hedge for tough times because it often increases in and after a market crash. For example, in and after the last stock market crash in 2008, the price of gold shot up like a rocket. But because people got scared, they looked for something that was safe, and gold was a good option for these investors. So, if other assets like stocks go down in the future, which a lot of experts like Dalio are predicting, gold could be a great asset to own. This is what Dalio says on the matter. We have a situation now where when you have too much debt leads to the printing of money to make it easier to service. So all of these things mean that some portion of your portfolio should be in gold. So yep, this is another emerging market fund that Dalio has exposed his portfolio to. All of Dalio's emerging market funds have slight tweaks to them, but essentially they are very similar, so we won't go too in depth into this one. What EEM focuses on is large and mid-cap companies, and it has over 800 of these in its portfolio. If you look at the performance over this fund, you will see that it is very similar to the other emerging market funds that we have discussed. Bad returns over the past 5 years and average returns over the past 10 years. But you know, the next 5 years could be completely different. It could be a completely different story. So we've just been through 5 of Dalio's largest positions. The next 5 we'll try to get through a bit faster. And then at the end, I want to summarize Dalio's overall strategy and portfolio. I think what I'm going to show you will surprise you. Coming in at number 6 in Ray Dalio's stock portfolio at Bridgewater is the iShares US Investment Grade Corporate Bond ETF. So guys, a corporate bond is when a business loans out its money to investors and obviously has to pay these investors back with interest. So LQD is one of the most popular corporate bonds, and it focuses on ones with more long-term maturities. If you want to own this bond ETF, you have to pay an expense ratio of 0.15%. And how much return will you get for owning this ETF? Well, for that, we need to look at its yield to maturity, which currently is 3.89%. Now, that's not a massive yield, but it is pretty good for a bond and for these market conditions. Also, Dalio has been predicting a recession for the future, so if you can own an ETF which has a high likelihood of paying out that yield, it's definitely a more safer option, especially for these market conditions. Okay, coming in at number 7 is the iShares S&P 500 Index. This is pretty much exactly the same as Dalio's number 1 position. They both track the S&P 500 Index, but the only difference is this one is run by iShares and the other one was run by Standard & Poor's. So IVV comes in at 2.4% of Dalio's portfolio. Again, what you'll notice about Dalio's portfolio is that he loves ETFs and bonds. Yes, he does pick individual stocks, it's just that they are a small portion of his overall portfolio. Anyway, so this bond ETF accounts for 2.4% of Dalio's portfolio. Essentially what it does is it tracks long-term USA Treasury bonds. They just need to have maturities that are greater than 20 years. This ETF has an expense ratio that is also 0.15%. If we look at its past performance, it's actually higher than you would expect. Since inception, it has returned a 6.2%. At the current price, however, you can expect a yield of around 3%, since that is its average yield to maturity. 2 more investments to go through now, guys. Number 9 is a high-yield corporate bond ETF that simply tracks high-yield corporate bonds. Apparently, it is one of the most widely used high-yield bond ETFs and comes in at 2.3% of Dalio's portfolio. Now, one thing I don't like so much about this position is the expense ratio, which is 0.49%, a little high for my liking. What I do like is the 10-year return, which has been 8.68%, but the return since inception has been a lot lower at 4.95%. If you buy it today, you can expect a return of around 6.58%, since that is its yield to maturity. But the one thing about this bond ETF is it's more risky than other ones, because corporations are more likely to default on high yield bonds than low yield bonds. Right, we've talked about emerging markets and we've talked about bonds, but this ETF combines the two and it comes in at 2% of Dalio's portfolio. This ETF would give you access to US dollar denominated government bonds in emerging market countries, and it's looking to seek those higher yield bonds. The expense ratio is also pretty high at 0.4%. The yield that you can expect on this bond ETF today is around 5.7%, and that's been around the return it's got since inception. So guys, those are Ray Dalio's 10 biggest positions that he has to disclose due to regulation at Bridgewater. But I've just given you Dalio's stock positions that he owns. Now I want to give you a broader look at Dalio's portfolio to give you a good overall grasp of what it looks like, not just his stock position. So to do that, look at this graph. Ray Dalio, I think it was just a couple of years ago, he disclosed what he called his all-weather portfolio to Tony Robbins. And this image that you're looking at now is Ray Dalio's all-weather portfolio. As you can see, it is likely that Dalio has more of his portfolio in bonds than stocks at this given time. So that's something to look into and take into consideration. If you want a good look at Dalio's overall portfolio, then this is the graph to look into to get a grasp of and study a bit more.